Hello, and welcome everyone to Day 2 of the Banking Revolution. I'm Joy McKnight, editor of The Banker magazine. Day 1 was packed with interesting discussions and debates. In an interview with Mairead McGuinness, she shared her perspectives on the outlooks of banking beyond the pandemic and how technology is changing how we consume and interact with financial services. Rogue trader Nick Leeson shared his story on what banking can learn from the past to create a better future for everyone. And Gary Opperman, MP for Financial Inclusion, provides insights on the role of policy in bridging the inclusion gap. We had a host of panels on financial literacy, the growing role of fintech in banking, and the evolution of payments. And a huge thanks to all the speakers and delegates for joining us, and Mambu for partnering with the FT on this event. Just a reminder to the audience to ask questions via the Q&A chat box on their screen. We can get to these during the session, and you can also tweet via the hashtag Banking Revolution. So let's begin with our first session entitled, Are Neobanks the Agents for Building a Better Banking System, or Are They More of the Same? With me is Maximilian Tayenthal, who's co-founder and co-CEO of Challenger Bank N26. Thanks for joining me, Max.
Good morning. Thanks for having me today.
So let's just recap on the N26 story to date. You started it in 2013, and now it's become one of Europe's most valuable fintechs, with 7 million customers in the US and Europe. So what was your dream when you co-founded N26?
Yeah, absolutely. When we started to work on N26 in 2013, we believed, and I still believe that this is true today, that financial services is an area of tremendous opportunity. For me, it was the area most ready for disruption. We saw this massive shift in user behavior from offline. People used to go to the bank branch to online. People started to do banking on the browser to mobile. People were more and more doing banking on the smartphone. And then we looked at the interfaces of the big European banks and banks beyond Europe, and we realized that no one was providing a great digital user experience. And so we thought there is this space, there's this opportunity for like a digital player, for like a company that provides a product for young people that like to do things on their smartphone. So in a way, we were frustrated by the lack of transparency or the lack of digital innovation and the personalized offerings of traditional banks. And we said, we want to create a new digital banking experience to disrupt the traditional banking legacies we were seeing. So we today developed, got a banking license in the meantime, did a couple of funding rounds. Actually, this Monday, we just announced a Series E funding round, which just valued us as at $9 billion, biggest funding round to date. And I think really setting a very strong foundation for the further development and expansion of our company.
Okay, I want to discuss that a little bit further later. But I guess my other question is, has this dream changed at all over the years? And how do you think that neobanks can really build a better banking system?
Yeah, I would say at the core, our vision to build a bank, and we want to reach as many people as possible. We have built our product with so much effort and emphasis, and now we want to bring the product to as many people as possible. So the vision to build a bank with 100 million customers around the world has never changed. However, our ambitions continue to grow and evolve as we explore new avenues. And right now we are working on expanding our product beyond our subscription, core banking, and payments. And we are working on other offerings like trading and crypto. I think, and that comes to the second part of your question, I think digital banks are better equipped and they're more agile also to tackle the constantly evolving needs to the customers. Like N26 as other digital players, we are very close to the customers. If you compare, like, someone comes to the bank branch like 2, 3, 4 times a year, traditionally banks know far less about the customers. We have so many touch points of the customers. Like, our customers open the mobile apps like 4 or 5 times every week, and whenever they open the app, we have a touch point with the customer. We're learning about the customer. We're looking at how they're using our product, what they're doing there, and we're using that information to constantly evolve our product offering. So I think also, if you think about flexibility, without like legacy systems, costly branch network, and a big own infrastructure, I think you can also stay a little bit more like slim, and you can stay more adaptive to change compared to traditional banks.
Okay, but with other challenges across the globe, N26 faces profitability challenges with a net loss of 110 million euros in 2020. However, one person said to me recently that profitability for challengers is a bit of a red herring. So how are you addressing the profitability issue? And then do you think it's a distraction from your overarching growth strategy?
No. First of all, like the net losses of 110 million also needs a little bit of context. We are fast-growing companies. Like 6 years from launching our product, also that figure is like down in 2020 about like 35% from the prior year. And then 26 is also profitable on a per customer basis. What is true is that, especially at the beginning of the journey, we were not really focusing on monetizing our customers, but we always had this strong conviction: if we get like 2 million or 5 million or 20 million customers that love N26 and that use N26 for the daily financial transactions, that at one point in time, we will also be able to monetize these customers in a fair and transparent way. Well, I think profitability is an important goal for us. We are actively choosing to invest like in growth, more. We are growing our team, we are growing our product offering, and we are growing our customer base. We're entering more markets and going deeper in the markets we are in. I think when you think about our P&L, it is true we don't have a big loan book. How many traditional banks monetize their customers. We're also not charging any fees. And if you look at our P&L, if you want to understand the P&L of N26, so other digital players, it's very important to also to understand the cost side, because that's where we have like a truly like competitive advantage. So we're operating at very different overhead costs. We don't have a branch networked and more and more customers not use anymore. We are an IT company with a more modern tech stack, and probably most importantly, we acquire customers much cheaper than anyone else, because we invest so much in the user experience and in the happiness of our customers. And every euro, every like working hour we're investing into our product and our user experience is actually an investment in customer acquisition, because we know that most of our customers join N26 because they have been exposed to the products by their friends.
Okay, great. I just want to remind the audience that you can pose Q&A questions in the chat box, so send through your questions for Max, but I'll keep going with my questions. So as you mentioned at the outset, N26 just raised $900 million. And of course, you're now way past a unicorn. But the German regulator BaFin is trying to restrict your growth through a customer cap to onboard about 70,000 customers per month. To me, that poses another question, which is, can challengers really be these agents of change in a highly regulated industry like banking?
To your first point, yes, absolutely. We have a very close contact with our regulator, and we also have, we also accepting that with a growing number of customers, with a growing reach, you're having also the expectations of the regulator are changing. And at N26, from the beginning, we have fully appreciated, what's the rules of the game. You obviously need to keep the data of the customer safe. You have to keep the money of the customer safe, but you also have to adhere to all the regulation, and it's a constant evolving. And we also understand that the regulator is constantly raising the bar in response to development, of our customer base and also of our European reach. Can challengers be agents of change in a highly regulated industry? Yes, of course. And I also think we must be. As N26, we've already taken a step in bridging the gap between legacy regulation and the necessary impact of technology on banking. But it has also been quite challenging. Sometimes you see regulations where you have a trade-off between security, compliance on the one hand side, and user experience on the other side. And it's quite often a lot of effort to bridge that gap in a way, that you're compliant on the one hand side, but you also provide the best possible user experience to the customers. I think openness to collaborate on both sides, so challenger side and regulators, is actually the key to bringing real change to the banking industry as a whole.
Okay, and I just wanted to carry on a little bit along these lines, especially around the regulators. Obviously, post Wirecard, many regulators are focusing more attention on rising fintechs, especially unicorns and decacorns. How can regulators best walk that line between ensuring a safe and stable financial services industry with supporting innovation? And then how can regulators really keep up with this fast pace of change that's going on?
Yeah, I think financial services have always been one of the most regulated industries in the world, and regulatory concerns have even further increased as technology integration has become more complex and also more pervasive. It is crucial for regulators to acknowledge that fintechs are leading in a way the future of banking. In turn, I think what the fintechs can offer to the regulators is a stronger understanding and insight into customers. As I said before, I think many fintechs are closer to the customers in a way, and they're tracking so many things, the customer behaviors. We also ask the customers what they want, what kind of products and features they need. And so we have, I think, somehow a better awareness of consumer habits and behaviors and desires. And I think what's also important, in the end, the regulator wants to protect the customer. And what is the value proposition of most fintechs is actually to want to offer better services at better prices. And so in a way, the innovation we have seen in the fintech space over the last years, I think it has definitely driven these two factors. I think it has helped to bring down prices, and in many ways it has helped to provide a better user experience. And I think just in your entry statements, you also mentioned financial literacy. I think in terms of the impact you can have on people, customers, giving them back the control over the finances, enhancing their financial activities by statistics and these kind of things. I think it's also something that we find very exciting.
So there's a question that's come in around the use of customer data, and the question starts off with some of the big tech firms have been criticized for underhanded analysis of users' personal data behaviors. As banks and new banks start to analyze this data, user personal financial data, very sensitive, how do we regulate this practice and ensure responsibility?
I think Europe is definitely one of the toughest data protection regimes in the world, which I think is a very good thing. So you have to keep data obviously private. And when I talk about intelligent use of data, I also don't think about using that selling the data, using data to spam the customer advertisement. It is more like this: how can you create the most adapted user experience? So think about Spotify or Netflix, Amazon, like all these other great digital companies. What they're really strong in is to provide a very much a tailored user experience. So if you're using Netflix, you will see a very different version of Netflix with very different content than what I'm seeing. Like when you think about, let's say we are both customers at the same traditional bank, it is very likely we see exactly the same online banking interface. And I more think about how can you really analyze the data and make the product experience only if the customer wants, by the way. Like there should always also be a way to opt out, but also like with other products, customers usually prefer, the best possible user experience, getting displays the most relevant content. So give you an example, you have a lot of money on your account, I have very little. So for example, we shouldn't see the same like products. You perhaps should see investment products should be offered to you, or I should be then offered like a credit product. Or if you're like traveling, if you know you're traveling, why not offering you a travel insurance, like for Euro a day or whatever, like these kind of things. It's really about how can you add value to the customer by analyzing the data. And very much that cannot be said often enough. It's not about selling this data, and it's not about using the data in any unfair or unethical way.
Okay, and then we've also got a few questions in terms of the profitability question. So one says, what are potential non-interest income strategies N26 is planning to improve profitability? And then another one is around, at some time, neobanks need to become profitable. That is the only thing that supports company valuation. Is there a risk that monetization drives customer churn? And so I don't know if you want to tackle one or the other.
No, I will take both. Let me start by telling you a story. We launched N26 in 2015, and for the first 18 months, no one at N26 had a single monetary goal. So we're working on all kinds of things, winning the trust of the customer, launching new products, launching new markets, getting our own bank license. But I said before, we had this conviction that at one point in time, we can monetize these customers. And then we saw actually revenues increasing, say like by 10x over the year. So every month over the last year, we added a couple of euros annualized in terms of unit economics, so revenues per customer. This was driven by two elements. Like one, we were launching more products. We started with a free base account, but on the way, we were launching credit products, we were launching insurance products, and all these kind of things. Second one was we were driving activity of the customer, or like say customers were getting more active, and activity means monetization. So there was more payment, so more interchange revenue for us, more customers using N26 as the main account, and so on and so on. And at the same time, we were driving down cost quite significantly. So also for two reasons. Like one, the industry we are in is characterized by extreme economies of scale. So as you can imagine, it's a very different story if you buy like 2,000 MasterCards or 5 million MasterCards, and literally with any contract, with any partner, we are operating with different contracts today. So think about insurance, about card processing, about card scheme, KYC, and many others. And the second element is like why the cost came down, like the variable cost. So only talk about the cost at scale with the number of customers, is that some of the products we are launching, in a way we are starting with a free base product, but they're quite high margin because the cost associated are actually quite low. So at the first couple of years, the question was coming very often, like, can you really monetize a customer? And in a way, no one has ever done it, without a loan book in a regulated interchange environment. So for people out from Europe, in Europe, actually the interchange is only like 20 basis points or 30 basis points, depending on the merchant category or like transaction type. But I think given our low cost base, we could actually prove that we can be today like very profitable on a per customer base. And to the other question, how do we want to drive monetization? There's a bunch of no-brainer ideas. We are close to the customers. We know what's the most requested features. The things we're currently working on It's like a trading proposition. It's a crypto proposition, but it's also like what we call our marketplace. So it's kind of best of breed. There's great fintech innovation happening everywhere in Europe and beyond. And we want to build, a platform for best of breed. We want to integrate with the best players possible, make a curated offer for our customers.
Okay, and then there's also a question that's come in around KYC, know your customer, and anti-money laundering. And I know last month, BaFin fined at N26 about 4.25 million for weak money laundering controls. And the question from the audience is, how does N26 face the challenge of putting in place effective KYC and AML controls?
If you, as you can imagine, like usually when you see like fraud or money laundering from a customer, in almost all the cases, there's exceptions, but it is it's new customers. It's not that you have an account with us for 5 years and you suddenly you're committing fraud in a way. But if you think about like at N26, that the number of new customers, because we're growing so much, the number of new customers as a function of total customers is very high. You can also imagine that fraud just naturally by the way how we are growing the business is something we have to be very aware of. How we want to tackle it is like we are tackling all other things by the intelligent use of technology. So when it comes to KYC, obviously there's a legal minimum standard. Obviously it follows the European directive, so it's applied, it needs to be translated into national law. So you can imagine we are finding very different legal situations in various countries, which is also a challenge for a model like ours that is doing like banking across borders. But what we want to do is, we want to be like very smart from the beginning. We onboard a customer like over time, develop a risk score for this customer. And also compared to traditional banks, we want to move away from the static system. Like think about how you authorize like a bank transaction. If you think about your traditional bank, it is usually the same level of authorization. If you send me the 20th time, like for lunch, like 10 euros, or if you do like 3 o'clock in the morning, 5,000 euro transaction somewhere to Asia, which you have never done before. And I think you have to be more adaptive. It's just like one of many examples. But, if you send me the 20th time, like 10 euros, perhaps you even make without any like authorization, you can just send that money through. And, and if there's like a totally unusual transaction with a high risk, it could be like fraudulent, it could be an account takeover. Perhaps there should even be like a customer service communication, with a verification of the customer and these kind of things. So again, I think just in a nutshell, I very much believe that the answer to these issues, to these challenges, is technology as well as it is to the question, how can you provide the best products or the best user experience?
Okay, and in terms of your business and moving cross-border, etc., one of the questions that's come in from the audience is, how did Brexit and COVID affect N26's strategic planning?
Brexit was having a massive impact on us, especially on our UK operations. We were active in UK before. We chose by that point in time that we want to leave the UK. I don't want to totally exclude the possibility that we might want to come back one day. But obviously, if you think about a European model where you want to onboard customers from all over Europe, obviously Brexit is a challenge. On top of that, we very much benefiting, from, European people moving around. We have 85 different nationalities in a team of 1,500 people. And what we were used to, traveling around Europe freely and being able to hire from everywhere, sending our teams to our London office, that has changed massively. COVID-19 was definitely a big driver of digitization. I kind of also honestly, we were also affected in 2020, March, April. If you think about activity levels, think about yourself. How often did you go to the cinema? How many restaurants did you visit? How many travels did you book? Obviously, we saw a massive decline, and we also saw less people opening a new account. If you were, in the most affected areas of Europe, you probably had different things to worry about than, changing your bank. But if you had changed your bank, you probably would not have went to the bank branches of UniCredit or BNP or Deutsche Bank, but you would have probably done it at a more modern online solution. We see in all the industries this like gradual shift from traditional models to more digital. And I think it's fair to say that in banking as well as in food delivery, entertainment, I think 1 year of COVID was probably worth 5 years of normal development in that regard. So in terms of driving digital models, definitely long term good for us, because accelerated the shift, like for our case, away from traditional banking models to the digital world.
Okay. And then obviously N26 privately owned, but rumors that you're looking to IPO in 2023. What are the reasons behind that?
Well, for us, there isn't a set timeline. We have done, I recently counted, I think 11, including all the extensions, 11 funding rounds to date. We don't have a set timeline. Like for us, it's always the question, how can we fund the expansion of our business? And for us, it's also our investors at the moment, they don't need to have a quick return. For us, it's really, as long as we can invest, all the money we can raise, but also all the internal cash flows into expansion at a highly positive return on investment, we will continue to do so. And for us, the point in time in IPO, it is definitely an important one for us. At one point in time, we also believe public markets will be the most liquid and the most efficient way to fund our expansion. But we are quite happy with the customers. But as early as 2022, 2023, we could actually look at an IPO. But again, it is for us, it's now important that the company is structurally ready, which it basically is, with final developments in the next 9 to 12 months. And at that point in time, or from that point in time onwards, going public will always be one of our options when it comes to bringing in new capital into the company.
All right, I'm so sorry, we're running out of time a little bit, but we have one last question, which is, what will the future competitive landscape look like? Will the incumbents disappear, do you think?
I think when you just look at the numbers, I just know them in Germany a little bit. Bank branches, the models are changing. Bank branches are disappearing. I think in 1990s, there was around 70,000 bank branches. In 2003, it was just, I think, under 50,000. And now we have 24,000 bank branches. So 70,000 just 30 years ago, today 24,000 branches. And I also read in the last year, about 10% of the bank branches in Germany have closed. I think that just shows that the model is shifting. But I think also incumbents are adapting to the new world, and also understand that it's important to have a solid digital customer proposition. I very much believe there will be space for players that come from the traditional world, but only those with a strong product and a sound business model will have an edge. In the end, the customers very much will benefit from greater transparency, lower cost, and also more innovative products. But there's definitely consolidation in the industry is happening, and in the end, the leaders with the strongest customer experience are going to be the ones that will sustain. And I think also organizational agility and the ability to build up a trust also in the digital space will also be extremely important.
Well, brilliant. Thanks so much for your insights, Max. I'm afraid we need to wrap up. Just a quick reminder to the audience that the session is available on demand on the website for 30 days. Stay tuned for the next session, which is a panel discussion discussing the missing middle, how banks must step up to better serve the small, medium, and micro enterprise market. And it's moderated by Owen Walker, who's European banking correspondent at the FT. Many thanks for watching.